How to exit a stock before it crashes. Yes, you heard it right. I am not lying. Today in this video, I'm gonna teach you how you can exit a stock before a potential bloodbath in the market. This is a very simple strategy anyone can implement. It's just using a one indicator. So if you're a new trader or if you trade from a long time, then you can just implement this system in your trading system and you can backtest it. Obviously, we cannot time the market, right? But there are some indicators or some strategies that we can use so that we can exit before a stock crashes. So let's say I will take the example of Bitcoin in my video. So Bitcoin went to 50,000 and 60,000 and then it crashed. But what if I tell you, if you already knew that where to exit the Bitcoin, then you could have saved a lot of money, right? You could have made the money and saved a lot of money. So without wasting a lot of time, let's go to my laptop screen and I will show you how to exit a stock before it crashes. So for this illustration, I'm taking the world famous Bitcoin. So Bitcoin went to 50,000 and 60,000 and then it again crashed. So how to exit before Bitcoin crashes, that's what I'm going to teach you in this video. Yes, I'm not lying to you. So how you can exit your positions. Say you are long in Bitcoin and then the Bitcoin crashed. So definitely it's gonna hurt your portfolio. But if you already know then how to exit before the crash comes, so at that time you can save a lot of money. Yeah, but we cannot time the market, but there are some indicators that we can use. So the first indicator is that I'm using is exponential moving average, and that's the only indicator. So I'm using two, EMA 13 and EMA 34. So here you can see, let me zoom it. The red line is the EMA 13 and this dark blue line is the EMA 34. So first I'll tell you how to exit. Okay, now let's take the example of this. Here we can see a bull run and then the Bitcoin crashed. So let me zoom it. So here is the crossover, right? So EMA 13 is crossing EMA 34 to the downside. So the crossover candle is our signal candle. So this red candle is our signal candle and we just need to note down the low of this candle, and low of this candle was 55,067 something. So we need to just note down the low, and on the very next day we need to put the sell price as the low of this candle. So on the very next day, and we just need to put the low of the candle, and we can see on the very next day this low get triggered and our positions were exited. So this is how you can exit before like there was then again there was a crash. Similarly you can also use for this for the buy condition. So let's assume, let's go to the current price. So here, yeah, so here we can see there was a crossover, right? So there was a crossover at this green candle. So but here EMA 13 is crossing the EMA 34 to the upside. So what we are going to do is we are just gonna note down the high of this green candle. So say the high of this green candle was 28,174. So on the very next day we need to put our buy price at the high of this candle, of this green candle. So on the very next day our buy price was triggered and then we just bought the Bitcoin. So now the Bitcoin is trading around 37,760. And again, for how to exit the Bitcoin, we just need to wait for the crossover. So once there is a crossover, at that time we need to mark that candle as a signal candle, and then again we need to just execute our trade. So now I just want to show you some more, like here. So EMA 13 is crossing the EMA 34, right? So here we are taking this green candle as our signal candle, and we need to buy at the high of this price, right, on the very next day. But as you can see, on the next days the high wasn't crossed. So on the again on the next day, so high wasn't crossed. So what we need to do is we need to wait for the next day. So say here when let's suppose we are here, right? So we need to note down the high of this candle. Now let's say the high is never breached, right? So let's assume we are here and the high of this candle is this. But on the very next day when we note down the high of this candle, on the very next day the high of this candle was breached. Okay, so our buy price is triggered here actually, not here, because here the high price was not breached. So our buy price was triggered here on the high of this candle, but again it was a crossover, so we just exited with small loss. And so this is the example that I wanted to show this to you. Sometimes the high is gonna not breach on the very next day. So what you need to do is, so you need to uh, first note down the high or the low of the signal candle, and then move and then wait for the next day. And if the next day is never high or low is not breached, then you need to note down the high and low of that candle and then go to the next day. Okay, so this is how, like, you are just gonna put the price of buy or sell or high or low with the previous day candle. So this was it. And yes, you can execute this strategy. This is a very simple strategy, but it can save a lot of money for you. You can implement this strategy in your whatever you are using, and you can back test this strategy just to make sure like it is working. And yes, do share this video with your friends, and do subscribe my channel. If you have any question regarding this strategy, I will be very happy to help. And if you face any difficulty, then just comment it down. I will also make another video for you. And if it is not clear, then just let me know. I'll see you in the next video.